Markets have started 2026 on a positive note. Overnight, we saw 70% of the stocks in the S&P 500 close in the green, led by chip makers. And all in all, the major indices are sitting around record all-time highs. Happy New Year. My name is Jessica Amir, a market strategist here with Moomoo. And it's great to have your company this year. And today is January the 5th. Let's just round out the major indices. So the S&P 500 is just 1.3% away from its record all-time high. The tech-heavy Nasdaq 100 is 3.7% away from its high, while the Aussie share market is a 4.3% puff from its record. While in Asia, Hong Kong's Hang Seng surged on its first trading day of the year, and now it's 3.8% away from its record all-time high. At the same time, we are seeing commodity metals surge, continuing. They maybe should be a part of your portfolio. And overnight, silver was the biggest gainer, leading commodities higher. And already we know that this remains perhaps one of the key themes to watch for 2026. That brings us to today's focus. What are the key themes that you need to watch this year? Perhaps the themes are clear: rising geopolitical tension, rising chip demand, and rising commodity demand. Now, what's happening for investors right now perhaps might be straightforward. Over the last couple of days, we have seen geopolitical tension back on the rise. And that's, of course, no surprise because the US has attacked Venezuela, and this is bringing defense stocks back into the focus. And it might mean that we could see defense be another key theme of this year. And defense stocks could be some of this year's best performers as they were last year. So that's the first consideration and theme for you to watch. The second theme that you should consider is that rising chip demand is probably very likely to continue. Now, we saw this demonstrated overnight with Micron and SanDisk being some top performers. As we know, Micron was a standout last year. So too was SanDisk. SanDisk rose about 568%. Again, this basically reinforces the fact that semiconductor momentum can continue as the AI infrastructure build out accelerates. All in all, you also might be expecting some of last year's top performers in semiconductors to perhaps be a feature of this year's leaderboard. But all in all, the key takeaway is that semiconductors and AI-linked companies could probably have another strong year, but it doesn't mean they won't have a bumpy ride. The third theme for your consideration is commodity prices. They're back on the rise, and this is something that you need to consider. Aluminum, copper. You say aluminum, I say aluminium. Aluminium, copper, nickel, silver, platinum, palladium. They're all on the rise, and all of those commodity prices were higher overnight. This is thanks to a couple of key reasons, and I believe that these themes could continue. One of those is the US dollar is continuing to fall under pressure. The US dollar against a peg of currencies around the world, we call it the DXY or the US dollar index, that continues to remain off its lows. How much is it off its lows? Well, it's down about 10% from 2024 levels. And this is supporting commodities because it makes them look cheaper because commodities are, of course, in US dollars. The second reason that commodities are gaining a lot of attention is because demand from China, the biggest consumer of commodities, is continuing. And if Chinese demand for metals continues, which is pretty likely, this could put price upside pressure onto commodity prices, and that's good for Aussie miners. The last theme, I guess, goes back to what we kicked off with, and that is geopolitical tension. With US attacking Venezuela, this reinforces perhaps geopolitical tension may be a dominant theme of 2026. So all in all, last year, these themes worked well, and it appears that perhaps defense, commodities, AI-related stocks could be likely to push higher again. And the undercurrent of all this is volatility. So what does this mean? When you think about these themes, with volatility likely to prick up every now and then, this is probably going to give you buying opportunities. So you could go, hey, when a stock, ETF, or a theme pulls back that you like, you might be looking to take advantage of the pullback to buy into those investments and sell them perhaps when they rip higher. This is something for you to think about with your own investment strategy. for this year. Now let's bring into the fold some investments to watch. Let's kick off with how you might like to get defense exposure. Let's talk about the world's largest defense ETF. That's the iShares US Aerospace Defense ETF, ticker code ITA, India Tango Alpha. Now, this ETF hit a brand new record all-time high overnight. It gained about 3%. Hello, that's because we're talking about geopolitical tension rising. So the thinking is, obviously, you'd think that geopolitical spending is going to rise, or defense spending, that is. So stocks in this ETF could be supported higher. The ITA in itself has done really well. If you didn't want to look at defense stocks, keep an eye on this ETF. As we said, it is the biggest by size. The ITA ETF has gone up 51% over the past 12 months. Stocks in this ETF include GE, RTA, Boeing, and Lockheed Martin. If you don't want to look at those stocks, again, think about the fact that this ETF is giving you broad diversified exposure to defense stocks and also space stocks as well. It does have a buy rating among analysts. The second stock to look at, or the second investment, is Micron. As we said, Micron was a standout overnight, and their shares did particularly well last year, rising 240% or thereabouts. But the fact that they made a stellar jump on the first trading day of 2026 proves that they should be getting some of your attention. Why is this stock doing so well? Well, as we said last year, this is one of only 3 stocks in the very specific space that it's working on in chips. It works alongside Samsung. That's one of its competitors. But the fact that this company is doing really well because it serves the AI data center and memory demand space proves that it should be on your radar. Last but not least, Nickel Industries is a stock to add to your watch list. This is an Aussie miner, and it rose 8% on the first trading day of 2026. This basically reinforces why it should be on your watch list. So for those that don't know, why did it jump 8% on the first trading day of this year? Well, it's because a SpaceX-linked company took a 10% stake in this nickel cobalt company. They basically also exercised the option to buy more of this company. So that is a real significant endorsement in the company. The fact that we've got a global, significant company taking a stake in Nickel Industries, valuing the project itself at $3.6 billion US. This really highlights the growing importance of critical minerals.